We start. Okay. The next topic we'll be doing is final accounts. Now, I told you guys the last stage of my accounting, that is identification of transaction, recording, classifying, summarizing. What is summarizing? Summarizing. Preparation of trial balance. What is preparation of trial balance? A statement which contains summary of all the ledger accounts. From the trial balance, the next step what we prepare is my final accounts. Are you clear? Now, I want you guys just to understand few things in trial balance, and let us try understanding how does it work in my profit and loss account and balance sheet. As I told you guys, from the trial balance we prepare final statements, and final statement comprises of what? Income statement and my statement of financial position. This we call it as balance sheet. Under income statement, my objective is to find the net profit or loss for a year. Under income statement, what is my objective? To find out the net profit or loss for a year. There are two statements what we make under income statement. The first one is known as trading account. The second one is known as profit or loss account. Right now, what we will try doing it is, let me just try taking a trial balance and understand whether it goes into income statement or whether it goes into the balance sheet. Income statement or what? Balance sheet. Then the moment I know it comes to income statement, let us further classify them as what? Whether it is going to come in my trading account or profit and loss account. Are you clear? Now, if there is any transaction which is outside the trial balance, we call it as adjustments. Fine. So whatever appears in the trial balance, it should either appear once in balance sheet or once in income statement. Whatever is in trial balance will only appear how many times? One time. Either in what? Balance sheet or in the income statement. Are you clear? Anything in the trial balance will never come twice. Please remember this. In the final accounts, anything in the trial balance, it will only come how many times? One time. So let me just take some random example of 5-6 things and understand how does the final accounts work. If you can get this base right, after the doing final accounts is a very easy thing. So I just want you to get the base right. Let me just draw a trial balance. What is a trial? What's the format of trial balance? Particulars, correct? Particulars, debit, credit. Now tell me few items which are gonna come on the debit and few on the credit. Let me write cash, and I want you guys somebody to keep calculator so that you can help me out with the numbers. Cash, how much do you want? Okay. Debit or credit cash? Capital, how much? Okay. Building, debit or credit? Loan, sales, purchases, salaries, debit, 70, 130, How much is the difference? 130, 180, 150, 220 more thousand, no? Let's say interest received. So is my trial balance tallying? How much? Typical format of trial balance. Okay, what are we going to do in a trial balance? First thing what we need to understand is, remember when we did our first chapter, accounting equation, we spoke about what is a debit. There are only two things which can come on debit. Which are the two things? Assets or expenses, right? And also when we did a chapter called capital and revenue, I told you assets come in the balance sheet, expenses come in the profit and loss account. Are you clear? So whatever is on the asset side, whatever is on the debit side, it can either be an asset or an expense. Are you clear? Now let us just focus on the debit side and let me classify, is it an asset or is it an expense? Are you clear? First one, cash. Capital not there. Building. Then sales not there. Purchases. Salary. So done. Simple classification. Are you guys done? Now next one. Anything which is there on the credit will be what? Liability or income, right? Income or, so let me go one by one. Capital. Capital is what? Liability. Loan. Sales. Then interest received. Are you clear? This is the first step what I do from the final accounts. That is, what is my first step? Identify whether on the debit side everything is an asset or a expense. Everything on the credit side is what? Income or? Are you clear till here? Now let me just write a simpler format of my income and expenditure statement and balance sheet and balance sheet. Now my income statement, generally we prepare it for a year. What do we do? Income statement generally for a year. Whenever I write trading and profit and loss account, or I say income statement generally will have a heading like this: in the books of Ravi, income statement for the year. If you want for year ending 31st March 2020. This is generally going to be your heading for every profit and loss account or a trading account. Are you clear? From this, I only have 4 columns. 4 columns. That is particulars, amount, particulars and amount. Are you guys clear till here? Till here, are you fine? What is the right hand side for you guys? For you guys left hand, no? For your left hand side for you guys, debit, and right hand side is going to be your credit. Debit side is always known for my expenses or losses. Credit side is always known for my. Are you clear till here? So whenever I do an income statement, on my debit side I should only have what? Expenditure and or losses. On my credit side I should always have what? Incomes and gains. Are you clear? Then the next format, we say balance sheet of Mr. Ravi as on, please remember, for income statement, what did I write? For the year ending. What did I write for the income statement? For the year ending. Why? Because I told you guys when I did my chapter number 2 that we always make income and expenditure as a way to ascertain my results for a particular accounting period. Whereas my financial position is on a particular date. So balance sheet of Mr. Ravi as on 31/3/2020. Are you clear till here? Are you guys clear till here? Now, this time is the first time I will be writing particulars, amount, particulars, amount. See here, every time I did my ledger, it was always what? Debit and credit. Whereas for balance sheet, it is going to be credit and debit. For balance sheet, it is first what? Credit and then debit. What is credit for me? Liabilities. And what is debit for me? Are you clear till here? Any doubt till now? Are you guys all fine? Now, whatever I've written, I went to my trial balance and classified, right? Guys, please just understand what I'm doing with it. Again, I'm saying just get your base right. Trust me, all of your final accounts question from now on, if you understand and apply this concept for the next 3-4 days, what we are doing, or 1 week, your accounting will become your strongest subject ever. Just understand what we are doing. I don't want you guys to do it mechanically. Just understand what we are doing. Now, whatever is on the assets here, I'll be writing it in my balance sheet. Whatever is an expense, I'll be writing it where? In the income statement. Are you clear? Which are the expenses I have here? Purchases and. So in the income statement, I'll write purchases. What are the amounts? Purchases is 30,000, salaries is 20,000. So I'll write 30,000. Are you clear till here? Then, have I covered both the cases? Sorry. Did I cover both my debits? Okay, which is my other debit left? Cash and building. So I'll come to my assets. I'll write cash, building, 50,000 and 1 lakh. Till here, does anyone have a problem? Now let me come on the credit side. What all do I have credit side? Let me write the incomes first. Which are the incomes I have? Sales and interest received. So I'll come to my credit side, write down sales and interest received. What is sales amount? Interest received? Are you clear? So I'm done with sales, I'm done with interest received. What am I left with? So I'm done with this. So I'm left with what? Capital and loan, 70 and 60,000. Which I should be writing it on the capital was what? Are you done till here? Simple classification. Is there any doubt till now? Now see here. What we do is, after we are done of filling up all the things, right now there are no adjustments. Let's just get the basic right. Once I'm done with recording all the things, what I do is, like the way we balance our final ledger accounts, we have to finalize or balance the P&L account. How are we balancing the ledger account? How are we balancing the ledger account? First do the totals of both, whichever is higher, that's going to be the total I write. What is my total of the debit? 50. Total of credit? Which is higher? So I'll write the total of the credit on both the sides. Right? Now whatever balance is there, see here. If the balancing figure is on the debit side, we say that to be profit. If the balancing figure is on the credit side, we tell them to be losses. Are you clear? Are you guys clear till here? So this time I have profit or loss. How much? 20,000. Are you clear? Profit is appearing on which side? Debit side. What is the rule I told you in the ledger account? If you have the balancing figure on the debit side, then we call them to be what balance? Credit balance. Whatever is the credit balance, you will be writing it here on the credit side. Whatever is the credit balance, I will be writing on which side? In the credit side of, which is going to be what? Liability side, I will be writing it as profit. Why? Logically, have you heard this concept, business entity concept? See, automatically it matches. Business entity concept, what did it say? Owner and business are different. Profit is the benefit for the owner for investing in the business. It's a liability to the firm. Which side did I write? Matching with my dual accounting concept. Whatever is debit will have a credit effect coming in. Once you do this, once you have done the transfer of what? Income statements, balance to the balance sheet. Now try doing the totals of the balance sheet and check, is it matching? Does it match? What is the total? So you can clap yourself because we are done with your final accounts. Did you really understand the logic behind it? Whatever we have thought till now, if you have applied it, it's just the same thing. We have not broken our head. What was a fear for us in the 11th and 12th final accounts and all, we have just put across in the same simpler format. Whatever comes in trial balance, right? It's coming once, so it should come in my either my P&L account or in the balance sheet. You record once. Assets should come in the assets and liabilities will come in the balance sheet. Income and expenses come in the income statement. The balancing figure of the income statement, if you have a debit balance, it will come on the credit side. If you have a credit balance, it will come on the debit side. Debit side, if you have a balancing figure, then it's a profit. Credit side, if you have a balancing figure, then it's a loss. Tell madam.
So if there is a debit balance, even then we just deduct it from the capital on liability side.
Where ma? I added no.
There is a debit balance.
Which debit balance?
In the income statement. If there is a debit balance, the loss will be deducted from the capital on the liability.
That's okay. That will come back later, advanced.
But you told we'll leave it on the credit.
Both are same only. Both are same only. You have two options to write everything. Either you can bring it on debit or credit, or you can do plus or minus. Both are same. Effect is the same only. If you get this basic right, final accounts is like almost you learnt what I taught you guys now is 6 marks of your paper. Out of 10 marks, just by getting this concept right, you can get what marks? You are only struggling more for how many marks? 4 more marks. You know, a lot of people struggle in interviews because they don't know the basics. Basics are stronger, you can work on anything you want. Basics are not stronger, you will struggle everything. Being for CS students, accounts is not a core area, whereas for CS it's your bread and butter. So you need to make sure your foundation gets completely right. In the real life, how does final accounts happen is, they will give you an extract of trial balance like this in an Excel. Correct, no? They will give you in Excel one trial balance. From there you will have to make a balance sheet and P&L account. And we don't do anything else, we do this only. Whatever is coming in the trial balance should only come once. P&L or balance sheet. Understood? From here, can I build your advanced stuff? Do you want to write it down? Can I start? Basic rules. You need to remember. Whatever appears in the trial balance will only appear either in income statement or in the balance sheet. Things to remember, very, 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 very important. Till here, are you guys fine? Anything outside the trial balance should appear twice. Anything outside trial balance should appear what? Twice. These are known as anything outside trial balance should appear how many times? Twice. That means you should give them an effect for one debit and one. When I say it should appear twice, you should give effect for what? One debit, one credit. Why? Because we are following which system of accounting? Dual accounting system, dual aspect. That means every debit should be having a credit. Are you clear till here? What can be debit? So either an item will be an asset or an expense. On the other side, it will be what? An income or a liability. This is what my adjustments are about. Done? So we'll keep this right now. We'll just run through few theory about final accounts, and then we'll come back to your trial balance and see the questions. Are you clear? Start off with few things from your study material, just the theoretical stuff what you need to know. For CS guys, it's very, very important. For CA guys, concept is important. You're not going to be asked questions on it. But for CS guys, many multiple choice questions come from this, so you need to just understand. We are trying to deal with non-manufacturing entity. When I say a non-manufacturing entity, I'm trying to talk about a trading concern, which is primarily involved with what? Buying and selling of goods. Are you clear? Service industry also falls into the same category, but for your foundation, we are only trying to deal with buying and selling of the goods right now. No. We are talking of a business. When I say business, it's applicable for all of them, whether it's a partnership firm or other things. But the difference between a sole proprietary firm and a partnership firm is the way of recording all of this is the same, just the format changes. The basics of final accounts is the same, only the way of reporting is a little different. Can we move further? I told you guys, final accounts, financial statements comprises of two things. Which are the two things? Income statement and position statement. Position statement is what? Balance sheet. And balance sheet, what does it comprise of? Assets and liabilities on a particular date. Position of assets and liabilities on a particular date. Income statement comprises of what? Trading account, profit and loss account. Trading account and profit and loss account, what's the difference between a gross profit and a net profit? We'll come back a little later. Now, I told you guys at the end of the income statement, my objective is to what? Arrive at the profit which gets transferred into what? Where does the profit or loss gets transferred to? To the balance sheet. Till here, are you fine? Fine. What are we trying to find out in a profit and loss account? We are trying to find out how much has the business earned and what is the profit made by the business for a particular period. Whereas my balance sheet talks about the financial position of a business on a particular date. Have we covered all of it? Chapter number 2. Okay. 4 more question. Just see here. What does a profit and loss account disclose? Profit and loss account disclosed in the income statement, whereas your position statement, that's the balance sheet, talks about my assets and liability position on a particular date. There are income statement has 2 parts, trading and profit and loss account, whereas balance sheet only has what? Categories of assets and liabilities. Income statement discloses the net profit of the year. Position statement discloses the assets and liabilities. It's the same thing again and again they've told you guys. We have already covered this. This is just a recap. The basic principles in regards to the accumulation of accounting period. First one, a distinction should be made between capital and revenue items and payments. Why is this distinction made? I told you guys, all your capital item will come in the capital items will come in the balance sheet. Revenue items will come in the income statement. Second one, we guys, very important, see here, I want you guys to read this and tell me we have covered this concept somewhere. Which are the concept we are talking of? Accrual, periodicity, matching. All the income and expenses of a particular period should be matched only with the income and expenses of that period to find out the profit or loss. Anything which pertains to the next period, you keep it aside. Only what is meant for this period will be considered for finding out the profit or loss. You remember? Accrual concept says all the income and expenditure which has been accrued in a particular period has to be recorded irrespective of the receipts or payments. Matching concept says all the income of a particular year should be matched with the expenses of that accounting period to find out the profit or loss. That is what we are doing here. Last one, just a theoretical one. Different items of income and expenditure should be accumulated under different heads. That we'll try looking into it a little later, not very important. Have we covered this already? First one, distinction between personal and business income. Personal is always considered under what? Drawings. Because of which concept? Business entity concept. Only the business income should come in the books of accounts. Capital and revenue expenditure, have we made a difference? No, no. Yes is this, sir. When is this is yes? Done. Everything we have done. All material information should be disclosed. Did we cover this also? Materiality concept. Record only current period transactions, we told you right now. Only transactions before close of account should be given into effect. What is this? We'll come back a little later. Fine till here? Okay. Now, let's just look into few things. When is that two accounts are gonna get interconnected. Whenever I told you guys, whenever there is a transaction in the trial balance, it should appear only what? Once. If there is anything which does not appear in the trial balance, anything which does not appear in the trial balance, it should appear twice. Anything which does not appear in the trial balance should appear twice. Whenever it appears twice, there is a interrelationship between your income statement and your balance sheet. Whenever there is a transaction which appears what? Outside the trial balance. Are you clear? Let me take an example. In your trial balance, they have told you salaries is 2500. Trial balance is saying what? Salaries is how much? 2500. Where does it come? How many times will it appear in my final accounts? In which account? Till here, does anyone have a problem? Can I teach now? Now I am saying there is an outstanding salary of 500 rupees. What am I talking of? This is given outside the trial balance. Where have they given this? What does it mean? What does outstanding salary mean? Salary which is pertaining to what? Particular financial year has not been paid. What appears in my trial balance is basically the salary which has already been recorded. Salaries which are already recorded. What appears outside the trial balance is the salary which is not yet recorded. Understood? This 500 rupees, is it salary for the year? This outstanding salary 500, is it salary for the year?
Yes.
The answer is yes. Is it recorded? No. What is your objective? To record it. You have to record twice. First, so what you will do is, see, I told you guys a very simple logic. Whatever is outside the trial balance, see the logic I use. It has worked out for me brilliantly. I write debit, I write credit. I write debit, I write credit. I know salaries is there. There is an outstanding salary also. There is a salary, there is an outstanding salary. How much rupees? Anything which is outside the trial balance should have one debit, one credit. What can be our option for debit? Either it can be an asset or it can be an expense. Correct? What can be an option for credit? Correct. Now, first thing, let me classify. Salaries. Which of the four does it fall into? Expense. That means now debit is taken care of. Now, outstanding salary can only be two things. What are the two things? Is it an income or a liability? You know how to make a journal entry? What's the journal entry for outstanding salary? Salary account debit. Yes or no? Salary will get added to your expense of your original salary. What does salary do? It will get added to the original salary. Outstanding salary will appear on the appear on the liability side of the balance sheet. Didn't understand? Got it? I'm having face reading issues. Yes, they keep blank face. You cannot make out. Did you all understand? Now, anytime adjustment comes in, up to a point that you become a master, I want you guys just to do this trick. Write down. It saves you 6 months of your life. Is it an asset or expense? Let me take another example. Okay. Prepaid salary. What salary? Prepaid salary. I'll give you the next one. Prepaid salary 500. Tell me how you're gonna record it. Prepaid salary 500. Okay. Did you understand what I told you?
That's income because I said it next month or
I'll tell you what you have learned and what I am teaching you. I told you guys there are two things. Madam, what you are explaining is right, so just listen. When I am saying prepaid salary, whatever you guys told is right. I told prepaid salary paid. When you pay a prepaid salary, what's your journal entry? Prepaid expense to cash, right? What is happening? Prepaid expense is an asset. Asset is going up. Cash is going down. Every time it's not necessary that. See, what did I say? There should be one debit, one credit. General rule is asset, expense, income, liability. Prepaid expense is an asset. I agree. It does not fit into any of this because I paid the prepaid salary. But it can also be an asset going down, no? Yes or no? Sometimes you have to go back to your basics when your actual logics do not give an answer. You go back to the basics and find. Just because I've told you a format, please don't keep saying, oh, yo, should be income then. It should be expense then. It can only be if it is that nature. Are you guys clear? What you get in the exam is not prepaid salary paid. Rather, they will only give you as prepaid salary. They will give you a term as what? Prepaid salary 500. Not prepaid salary paid 500. There's a difference between the both. What do you mean by prepaid salary? In the adjustment. Prepaid salary in the adjustment means that in the salary what you have currently paid, that is in that 2500 example which we saw yesterday, saw 5 minutes back, right? The 2500 has a salary of 500 which is pertaining to the next year. What does prepaid salary mean? That the salary what you have paid does not or has something of 500 rupees which is pertaining to which year? Next year. That means from your current salary of 2500, reduce 500. When you reduce 500 from your expense, that means you're debiting or crediting it. When you're reducing 500 from your expense, are you debiting it or crediting it? You are crediting it. What are you going to debit? Prepaid salary is an asset to me. Prepaid salary is what? Asset should be debited or credited. So your journal entry becomes prepaid salary account debited to salary account Understood? Now guys, see here. Have you already covered the matching concept? I'll just read the lines, look into it. If a certain revenue and income is entered in trading and profit and loss account, all the expense related to it, whether payment is made or not, should be debited to the trading and profit and loss account. Which concept are we talking of? Accrual and matching concept. Irrespective of the payment, if it pertains to the income of that year, you should definitely charge. If some expense has been incurred, but against it sales will take place in the next year, the expense should not be debited in the current year's P&L. So it clearly is saying my profit and loss for the year, we should only have income and expense of that year only. Anything which is outside that, please keep it away from the profit and loss account. All of this basics are necessary for you to do your further accounts. Please remember, when I talk profit and loss account, it should only have what? Income of that year, expense of that year. Anything which does not belong to that year, throw out. You do add, you do subtract, do anything, but you have to make sure that it does not reflect in your profit and loss account. Balance sheet, let it find out whatever you want, but don't bring it to my P&L account. Are you clear? If an income is received in the current year, but the work has to be done in the next year, that is treated as income received in advance and should be shown on the liability side. If you have received an amount for a sale which will happen which year? Next year. But the money has already been received which year? This year. Don't treat it as your income for the current year. It will be income for the next year. Till that time your project gets completed, that income is treated as your liability. Understood? Done? Exceptions, we'll look into it later. Before we go in, what do you mean by gross profit? Gross profit basically means, gross profit basically means from your sales you reduce your, what is COGS? Cost of goods sold. What do you mean by cost of goods sold? Opening stock plus purchases plus direct expenses minus closing stock. Gross profit term means that you are only taking the expenses of production against the sale, or expenses of the product directly related to a product towards the sale. We do not consider indirect expenses which are not related to my production. Are you clear? Now, do you know how to find COGS? What is COGS? Opening stock, purchases plus direct expenses. Okay. The same thing, if I have to write it in the format of a trading account. A trading account is prepared with an objective to find out the, a trading account is done with an objective to find what? Gross profit. Are you clear? Out of your income statement, I told you guys, we make two accounts. One account known as what? Trading account. Another account known as profit and loss account. Right now I am only talking of the trading account. Format of the trading account is the same, which is what? Particulars, amount, particulars, amount. Are you clear? Now, what do I write? See here. Opening stock, purchases, direct expenses on my debit side. See here, what does it mean? Logically, let's try understanding. Boss, I already have a goods. This year I purchased something. I incurred some expenses. Against this, I am making a sale. Sale price will be higher than the cost price. The difference will be my profit. Logically, yes. Wait. I didn't finish. I didn't ask you for doubt. I'll ask you. Just wait 2 minutes. Whatever I have goods, my objective is to make a what? What do I make out of it? I make a sale out of it so that I earn my gross profit. It is not necessary that whatever is available for sale should be sold. There will always be some things which are unsold. This unsold goods, we call it as the closing stock. Right? Now, I have two options. Option 1, reduce closing stock here. Rather than that, we write it on the credit side. Okay. Now, if I write it more in terms of a format, see here. Opening stock, purchases, then what? Direct expenses, sales, closing stock. The difference becomes my. Now understand even more further. Opening stock will be recorded at cost price. Purchases are at cost price. Direct expenses are at cost price. Sales are cost plus profit. Closing stock is what? Cost price. Therefore, automatically the balancing figure will become what? Profit. Should I explain this again? Did you understand why does a balancing figure come? Is because of sales. Now if you see what is COGS, forget now anytime in your exam too, you forget COGS. What is COGS? Basically I have to bring this here. What did I say? If you bring credit to the debit, is it a plus or a minus? Minus. Opening stock plus purchases plus direct expenses minus closing stock, COGS. That only we are doing till now. For that they have wasted 12 pages of your book just to explain this, which we already learnt it in our chapter 2, basics. Does it make sense? So profit is derived where? Because of my sales, not because of anything else. Are you clear? Now let us go a little bit more in depth. Everyone see this one. Trading account format. Per opening stock. We have already covered this. It appears on the debit side. Now I only show here, please remember, net purchases. We only show what? Net purchases. What do you mean by net purchases? Purchases minus purchase returns. Are you fine till here? Done till here? Next one. Will direct expense come on the debit side? Okay. What are the direct expenses and what are indirect expenses? Direct expenses are all the expenses which are incurred. I am talking of non-manufacturing company. Direct expenses are the expenses which are incurred to bring your goods to the present location of sale. To your present location, that's your factory. to bring that whatever you are incurring your expenses on these raw materials, they are all part of my direct expense. Are you clear? On the sales, again I told you I'll be writing the net sales, which is basically sales minus sales returns. Are you clear? Clear till here? Do we start? Okay, let me just write the format and try understanding. Opening inventory comes on the debit side or the credit side? Opening inventory comes on the debit side or the credit side? Purchases? Carriage inwards? Direct expense? Debit side? Wages? Sales? What do you mean by return inward? Sales or purchase? How do you classify a return inwards?
So inward is what we are getting into our
When I say carriage inwards and return inwards, see here, carriage inwards is basically means goods are coming into my business, right? When I say return inwards, goods what I have sold I am getting in. What do you mean by return inwards? Goods which I have sold is coming in. Return inwards will be sales return. What do you do for sales return? Reduce from the sales value. What do you mean by return outward? Goods which you have got, you are sending it outwards. That means these are my purchase returns. What do you do for purchase returns? Reduce from purchases. Are you clear? Last one, closing inventory. Which side? Now do your P&L account. Do your P&L account, and I need it as per the format. Trading account for ABC traders for 31st March 2017. Please write the format trading account of this entire thing becomes your heading. Guys, check your answers. Opening inventory 1 lakh. I told you purchases, we only write net purchases. This you can either write it like in a columnar format, or you can just write it like this. Purchases 6,72,000 minus 72,000. Both are fine. Carriage inwards, wages, sales minus sales returns, closing inventory. The balancing figure is net profit, gross profit. Are you clear?